Welcome to Market Matters presented by MyX. I'm Joe Tigay. Brian, how are you?
Great. Happy Monday. Markets are moving higher today, so lots to be excited about if you've been long this market.
Yeah, I think this AI revolution, this AI story has just been fascinating to watch. It's been exciting to follow. Today we got big news in that front. I think that's really driving the markets higher today. But again, another day, markets higher and volatility's higher.
Yeah, that's been an interesting story all year that we talked about. We'll get more into that on the show. VIX continues to trend higher as this market continues to move higher, and lots of excitement over AI. The biggest one, obviously, Apple and Google. That's been the big news, Joe. What are you seeing there?
Yeah, Google's going to license out its LLM to the iPhone. They're going to be on the iPhone. They're going to get paid to do so, and it's kind of exciting for Google. Obviously, their Gemini has kind of been taking the backseat to Bard lately, so it's big news on that front. It's also exciting for Apple because Tim Cook is saying they got some AI stuff they're going to use it with. I think the market's just kind of excited on both fronts.
Yeah, so we're going to talk more about the show, how we're going to trade Apple, what we think of Google here. Obviously, this changes a lot in their business model. And yes, who's going to win is really the big story that we'll get into on this show. So stay tuned for that because we have a really interesting discussion and a trade on Google in terms of stocks of the week. That will be our stock this week. I've got a great play for you there.
Yeah, so this week, I mentioned volatility is higher, markets higher. This is a FOMC week. That's going to be a market-moving event. We should be eagerly anticipating that, and we should expect some moves. Sometimes that first move is a false move. We can fade that, but it usually, especially in these types of environment, it usually is a day when you're going to see some moves in the market.
Yeah, and obviously the NVIDIA AI convention that's going on has a lot of buzz in the market, people getting excited about what artificial intelligence means, where we're going, how much more can it continue to expand. I personally think we're still in the very early stages of everything here, so there's still lots more to come. But really, FOMC should be an interesting play because we talked about volatility moving higher as the market moves higher. We'll see what happens after that. We have a little bit of information on where the VIX futures curve is trading as well and how that will play out once the FOMC decision is made this Wednesday.
And we've been following this. We've been in this extreme greed area lately. Really, the big mover in this is the volatility component of it. The VIX index, when that's higher, we're kind of ticking down on this extreme greed. When it's lower, we're looking more extreme greedish. So really, we'll be following that. But we've been riding this extreme greed away for a while, and that should be expected with these markets making higher highs and moving into all-time highs. So it's something we just have to be very cautious of. When you get this level, you want to participate in these gains, but you got to be very careful because we know it can turn around in a hurry.
Yeah, it certainly can. You'll get a volatility pop in the market, a big down swoosh to sort of shake people out. We saw a little bit of that last week and even the week before. We on that little whoosh down that we had, we were actually using structured notes to sort of enter into the market for clients, got some good levels. But that presents some opportunity to trade the market. Once we get sort of this overbought condition, you'll get this like carpet shakeout, and that might be some opportunities then to jump in.
Yeah, and really the big gains and the big volatility, a lot of the big volatility in the market's been coming from NVIDIA. NVIDIA created that carpet shakeout last week. We've seen tremendous returns out of NVIDIA, but we've also seen steep pullbacks. Maybe people getting FOMO, coming in, buying, or getting leverage long up here at these highs. A lot of people do that with options, Brian. And I brought up here the maximum pain chart here for NVIDIA. This will be for the April expiration. And it's really fascinating to see calls are outpacing puts here. And there's a couple strikes with a lot of open interest.
Yeah, I think this is interesting because what we've noticed is that when the put to call ratio, if you look there in the upper corner where that ratio is located, it's under 1, meaning that there's less puts traded than calls. When that happens, some of these big open interest strikes actually act as a repellent, right? So it's almost like two negative electrons trying to get together. They can't. They just kind of go far apart from each other. And really, if you look at the amount of open interest on that 800 strike, Joe, it's massive compared to other things. Maybe the 1,000 strike is the next closest one. So 800's really been this support buffer for NVIDIA, not allowing it to get down there and really moving and staying away from that. So it'll be interesting if there's any kind of trigger come the next earnings. We'll start to look at this to see if something like that 1,000 strike becomes to be in play, because if that's a repellent and it actually breaks through 1,000, it really could be off to the races on the next level higher, believe it or not.
Yeah, that is it is fun to see. Yeah, when we get this, just I mean, these options amounts are just crazy. So there are people that own these. These are retail customers that own these calls. And these are market makers who have sold them. Market makers like to play delta neutral. They're short the call if it's racing up. They're going to be buying the stock back. That's exactly what you're talking about. You get that repellent. It's going to race right through there. I'm sure people who own these calls would love to see that. That said, there's a lot of volatility in this name, and it really drives volatility in the market. And we're seeing that. We're seeing that in a big way. You know, NVIDIA is up 400% year over year. We got the market. The volatility bottomed out in December, and it's been making higher lows. It's been making higher highs since then.
Yeah, we talked last week. I mean, we said, you know, the VIX is trading near the top end of this like up channel that it's been. Maybe it needs a little relief. We got a little carpet shakeout. Now the VIX is kind of sold off. It's in the middle of this trend channel. We don't really see it, or at least I don't see it really falling out of this upward trend, given that there's still some relative movement. We're still getting these occasional 1% moves in the market. That would equate to a 16 in the VIX. Every 16 VIX handles is about a 1% market movement on the S&P 500 for most of the time. So if we're still getting that most of the time, especially on these news events, FOMC this week in particular, that will be relatively interesting, because with the FOMC, the VIX, I think, is still kind of sore in the middle of this trend channel. After the news comes out, I expect the VIX maybe to head towards that lower end of the channel, but not to say that we won't get a fairly sizable move off of that. A 2 standard deviation move out of the FOMC with the VIX around 14, that's probably about a 1.5%, maybe even close to 2% move off that, and that won't be, you know, uncommon.
You know, I don't disagree with you at all. I think another way to look at this chart is you can kind of say we actually are kind of making some lower highs here. So we kind of have a little bit of a wedge maybe shaping up here. But of course, this is a big critical event. I think we're kind of coiling here, perhaps. One way to look at it is you could see a little head and shoulders pattern here. And if that's what turns out to be, if the Fed is extremely hawkish, you know, you could see the VIX, you know, up at 19, maybe you could really see the VIX race higher there if that comes to fruition. If we make a higher high here, I think that's certainly one possibility. Of course, the other possibility is after this event, the news is out. Even if there is a big move in the market, there might not be another catalyst for some time, and you could see this lower end of the trend line tested or even violated.
Yeah, I think those are great levels to watch. So really, you know, 13.5 on the VIX. Break below there, watch this lower end of the trend line. At that point, maybe you want to be a short volatility trader, but above, you know, call it 15 and a quarter or so, you might want to buy and jump on the bandwagon and get out there buying some puts. At least that's how I'm probably going to play it.
I feel like John Madden right now. I got too many lines on this chart, but I'll work on that.
Yeah, very, very well dissected. Hopefully everybody followed along.
Next, we got the VIX term structure. This, of course, we're going to follow this every week. If you like this sort of content, remember, tell your friends, like and subscribe, and all those fun things. We are right here, and you know, Brian, I got to give you credit. Last week, you told me, you know, we were at the current week was at the higher end of this spot, and you were saying after this inflation data, we could see volatility fall, and that's exactly what we got.
Yeah, and I think that's what you continue to see with people are sort of, you know, we're underpricing that March VIX future. That's why you're seeing it trade sort of at a discount to the VIX cash itself. Remember, that settlement, by the way, is this Wednesday morning, so that will roll off just before the Fed meeting, and that's probably why you're seeing that second month April future trade higher than the VIX, expecting some level of movement. But it'll be interesting if that April then starts to trickle down, become like a March future once this news event is off, and then we get that more steepness in the curve here, and some of the back month or April May futures start to come off.
Yeah, be interesting to see. Typically, that is what we see, unless something kind of changes or some sort of dynamic change. There's certainly possible. The catalyst is there. The Fed could change how the market's viewing these interest rates. They are going to have their dot plot, which could change things. So, anyways, let's move it on to the big story of the week. We talked about it on the open. And we're talking about Apple and Google. What is going to happen here, and what does this story really mean?
Yeah, well, I mean, when you look at it, Joe, it'll be interesting, right? Because I think, you talk about Google, it's the search engine model that's been such a moneymaker for them, trying to get on top of a search engine, paying for ad space, all that. Do you think that maybe that goes away if it's all about AI and you just simply type into Gemini, tell me about such and such, and it's going to give you a very elaborate answer to respond to that, rather than you having to one by one search and see other things?
Yeah, I mean, that really bites into their business model. And I kind of think it's for the benefit of all users. Like, I think search on Google has gotten progressively worse over time. And I think, when they IPO'd, their search was fantastic. It took you prompted a question, it gave you the exact answer you were looking for, and you went right there. I think we're going to get a little bit closer to that going forward, because lately you got this Microsoft Bing search really eating into Google in a big way, because they're just giving you the answer that you want instead of having to see all these ads on top of it. I think Google, now that they're on Apple, I think they're going to have different revenue streams. Of course, I think this is going to be really big for them. Of course, they're getting the big gain out of this news. But the other thing to remember about Google is when it first started, maybe younger viewers might not know this, but Yahoo was the name for search in the internet when Google was first coming out. But Google search was better. They gave it away for free to Yahoo. And then everybody knew it became the standard. Google became the best search. Everyone knew about Google, and their search exploded because it was like what people were already using. I think that's kind of what you see at the starting phases of a new revolution. That was the .com revolution. I think with this AI bubble, if Google's going to be the standard, if Google wants Gemini or their AI, their large language model, to be the standard, people have to be using it. I think that's a huge deal for them to be on the iPhone, having people using it, and just understanding it like, this is the best one. This is the one I know. This is the one I use.
Yeah, well, but I think the other interesting story, Joe, is the fact is Apple throwing in the towel. They already threw in the towel on cars and automobiles. And in fact, I'm headed out to spring training in Phoenix, where Waymo has their autopilot vehicles where there is no driver driving you around. It's literally driverless. You sit in the back seat. It takes you to where you want to go. We've seen Apple already thrown in the towel on the vehicle area. Are they throwing in the towel really on AI and saying, look, we're not good enough to make the base development of things. We're just going to partner with Google, let them do some of that. And I wonder if this is going to start to snowball. There's so many parts of artificial intelligence that can be used in adaptive, besides just typing in and getting back some information on how to write an email. That is this the start of needing other little parts of people that are very specialized, which Google has become with their Gemini tool, and incorporating it. And Apple is just going to start to piece people together to start to build out their iPhone in a better fashion, not necessarily do it themselves.
I would say not so fast, my friend. I don't think Apple's quite out of it quite yet. I think it's actually pretty standard for Apple to recognize technology and then come onto the game after it's already used, and then come out with a better product or a more user-friendly product, or just bring something into their ecosystem that people love to see. The iPhone wasn't the first, handheld tablet out there. They copied BlackBerries and they just made it better. They made it more user-friendly. I think AI is kind of out there. I think Apple has the staff. You mentioned they're not making a car anymore. Well, they took those engineers. They're working on AI now. So Tim Cook hinted, they mentioned that there's things under the scene. Just think about what a personal assistant could do on an iPhone, with scheduling and calling and just understanding you. I think, they might have tools ready and waiting for their next generation of iPhone. It might keep them on top of this, this phone world. When, we're last year where people were saying, do I really need to spend $1,000+ for an iPhone when I can get a similar phone for $300 that does all the same things? Well, this might be the reason to keep people coming back to Apple.
Yeah, they're great at selling and keeping people on the crack, of the phone itself, right? So Joe, just looking here on this deal, like what it means for Google, I kind of wanted to highlight. I think the chart is really interesting. If we could bring up some technicals here, we look at this. Maybe you speak to the fundamentals here first, and I'll get a little bit into the technicals. And I want to give you here's our stock pick of the week, which is Google, and I'll give a trade on that. But Joe, why don't you speak to the fundamentals on what it means for Google right now?
Yeah. So Google, of course, people know this is an AI stock. They have the large language model. It's the Gemini now. And, they want to be the leaders in this world, of course. So people might look at this PE ratio. It's 22. Honestly, that's not that high at all. But if you kind of look under the hood, and this is just at, the forward PE ratios, if you kind of just go out 2.5 years, you're all the way down to 17. And that's just on the analyst estimates for their earnings, which Google actually does a really good job at beating those estimates. So this PE ratio is very attractive when you're looking at a lot of other companies out there. And when you're thinking, oh, we might be in a bubble, well, forward PE 22, it does not seem so bubblicious. It seems like something that has plenty of room to grow, even with a company that's $1.76 trillion.
Yeah, it's rather crazy. And look at the technicals, I think line up really well that this stock is going higher. I mean, just full disclosure, I own the stock personally. We own it for clients as well. So we're already playing this thing. But if you look at sort of the head and shoulders bottoming pattern that it made, going back to 2022 when the NASDAQ had such a terrible year and then sort of broke out in 23, Google participated with that. This nice handle formation out of this like cupping area of this bottoming pattern. And that cup is about a $46 range. So if I tack on a price target of another $46 move out of that, which I've seen stocks do as they break out of this sort of head and shoulders, they usually go about the dollar amount that they were sort of in this low bottoming pattern. And that would really put the stock up at around $176, $180. And so I think there's a play to be made still to the upside. Now, do we fill back this gap that it made this morning of this huge exuberance over joining Apple? Maybe they do. But I can use options to sort of play that in case there is this back and fill pattern where I don't have to sort of ride the carpet shakeout. I can wait and have different price levels. And with the stock trading around 148, I'd be looking about 6 months out, selling the September 125 put. I'm also going to look and sell the 190 call. Okay, so I bring in a net premium of $5.50. Now, what do I want to do? I want to participate to the upside. So I buy that at the money call, the September 150 call. I can do that for about 13 bucks. Net, the debit is $7.50. That seems like a lot. But remember, you keep cash set aside. You don't, unlike buying a stock where you have to put up cash to own the stock, I get to keep my cash. I get to collect 5% interest rate until I get put to this stock come September if the stock is below 125. So I'm earning interest. I'm earning back interest on this debit. So I almost pay actually almost nothing, a few bucks to get long this stock here above 150. And I get to ride it up for about 30% to the upside. And I don't have to get long it until about 15% to the downside, right? So I've created this like sort of principal protection kind of strategy that we like to look to do. And I think the risk reward is beautiful right here.
Yeah, I think you're making a good point. So your strike right there where you're getting it long is all the way down there. That looks pretty attractive to me. I would want to buy Google at 125, and it does seem risky right here. A lot of these AI stocks are risky, so I think that's another reason to look at options, to look at different strategies to get upside exposure with these names.
Yep. So that's been our big stock play of the week. Hope you enjoyed that. Joe, any questions? Where do we go from here?
That will do it for us for the week. We don't have any questions today. Remember, when you're streaming, when you're watching live, feed us your questions. We're happy to ask any questions. Brian and I have a wealth of knowledge, of course, when it comes to options trading. Brian was trading options on the CBOE starting in 1999. I think so. He's seen quite a few, and was an early adapter to VIX options. One of the first market makers in that pit. I, of course, was a market maker alongside him in the VIX pit, market maker in the S&P 500 pit. So we have a wealth of knowledge when it comes to that. So happy to field any of those questions, give you some of that knowledge which we've earned over the years of trading.
All right. Well, if you liked our commentary about Google, Apple, volatility, where the markets are headed, make sure you like. If you're watching this for the first time, please subscribe. It's been a great show. This is Brian Stutland here with my colleague Joe Tigay of Equity Armor Investments. Our show Market Matters, sponsored by the MIAX and Trader Hub. Thank you for putting this on. Tune in every Monday right after you start eating lunch or finish up your lunch, 1 p.m. Eastern. Tune in next week. We'll see you again with more to come.
All opinions expressed by Trader Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trader nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trader nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Trader Inc. is the parent company of Trader Brokerage Inc. Trader Brokerage Inc. and Trader Inc. are separate entities with their own products and services. Securities products and services are offered through Trader Brokerage Inc. Trader Brokerage Inc. is an independent subsidiary of Trader Inc., all rights reserved, member FINRA SIPC.